The euro is steadying after the Brussels terror attacks sent the currency sharply lower. But the trend points to the euro continuing to rise on the back of a weaker dollar and the eurozone's growing current account surplus. With me to discuss why he thinks the euro is not necessarily going to rise is Michael Sneyd, FX strategist at BNP Paribas. Michael, our first chart is actually the trend of euro dollar again over the last 6 months. We can see the impact of the terror attacks right at the end, but what has been driving the euro higher?
I think this chart shows very interestingly how the euro's trend, particularly over the last 3 months, has been quite choppy. And that really reflects that we have different drivers in currency markets at the moment.
Which are?
So we have policy divergence. That was a main driver the last few years. That's taking a little bit of a backseat. And now risk aversion is really important in FX.
And the US Fed moving into a much more dovish stance is sending the US dollar weaker, and that's another factor driving the...
Yeah, that's really contributed in the month of March.
Let's look at our second chart, which is the other key driver, which is the current account surplus, the balance of payments. Explain what's been going on here. We had some more data on Monday, didn't we?
So this is a key theme for us at BNP Paribas. So here we have the Eurozone's current accounts surplus, which is the dark blue lines. And if you remember back to 2013, 2014, this was attributed to a large rise in euro. Now what we've seen over the last 18 months is the current account surplus has remained very big, but this has been offset by debt outflows. So essentially Eurozone investors going and buying foreign bonds.
Hallelujah, the euro is weakening for the ECB.
That was, very important last year. What we see at the beginning of this year, however, is that when you have periods of higher risk aversion, those investors don't want to take on the risk of buying foreign assets. So that recycling of the current account surplus that you have breaks down.
And therefore, you have the ECB in this difficult position of having a stronger euro. But our third chart points to an eventual weakening of the euro by the end of the year. Explain what this is.
This is a very good chart for taking a step back and looking at the implications of the ECB's asset purchase program. So what we have here is the net supply of Eurozone government bonds. So what this looks at is the new bonds being issued by governments minus the redemptions, and then also subtracting the purchases of the ECB's purchase program. Now what this means is a negative number reflects that the amount of bonds in the market is shrinking due to the ECB going out there and purchasing more bonds. In 2015, this attributed to about 200 billion reduction in the amount of bonds available for private investors.
And clearly your estimate for 2016 is a lot bigger then.
It's a lot bigger. So because we have less bonds being issued and because the ECB are buying more bonds, this story intensifies this year.
So Draghi's ECB program really starts taking off in the second half.
It takes off in the second half. The implications that is going to have for markets is it will push lower Eurozone bond yields, and it's also going to push lower the euro, we think, because investors will be encouraged to go and find assets outside of the Eurozone.
Where do you think?
We're looking for 116 for euro dollar first half of the year.
And second half, by end of December?
We're looking for a decline towards 114 and then a continued decline throughout 2017. 105 is our end of 2017 forecast.
Factors driving it, in conclusion, balance of payments will continue to make it weaker, but the QE program of Draghi is really going to start kicking in. That's the key factor.
That is certainly key, for the second half of this year.
And just finally, the Fed impact. So we could be seeing Fed rate hikes. So we could actually be having the dual impact of the bond purchasing scheme and the Fed hiking, which is going to send the euro lower again. Is that right?
That can be the case, yes.
Michael, thank you very much indeed.